Welcome to This Explainer. Today, we're diving into what honestly feels like a high-stakes financial thriller. We are setting the stage in July 2026, breaking down in plain English exactly how the Western AI ecosystem really operates. Think of this as a diamond-sharp look at the financial engine building our AI future. We're going to explore both the roses and the thorns of this massive, interconnected machine. So, let's get right into it. Okay, just look at this staggering number. $1.4 trillion. Back in late 2025, the Western AI complex wired together over $1.4 trillion in interlocking financial commitments. To put that massive figure into perspective, right when this financial loop was being built, OpenAI was generating just about $13 billion in annual revenue. I mean, the contrast between the actual cash coming in and the trillions being committed, that is absolutely the defining economic story of our decade. Now, analysts are pretty divided on what to make of this setup. Dylan Patel over at Semi-Analysis provocatively called it the infinite money glitch. But, to be totally fair, admirers of this massive web of capital refer to it instead as the Stargate ecosystem. They see it as a completely necessary engine to drive progress. Critics, on the other hand, well, they see a circular mechanism where the money just kind of keeps spinning.
Section 1. Anatomy of the loop.
Let's trace exactly how these deals work.
Okay, here is where it gets really interesting. Let's trace the capital. Step 1. NVIDIA signs a letter of intent, pledging up to $100 billion to OpenAI. Step 2. OpenAI turns around and pledges $300 billion over 5 years to Oracle for a huge cloud contract. And Step 3. Oracle then pledges about $40 billion to buy chips, specifically from NVIDIA. Do you see what's happening? The money leaves Santa Clara, travels through a massive cloud contract, and lands right back at NVIDIA as revenue. It is quite literally the exact same dollar traveling in a circle.
So what are we actually looking at here? Well, it's a classic financial mechanism known as vendor financing. Basically, NVIDIA's investment becomes OpenAI's compute budget. Then that budget becomes Oracle's cloud revenue, which in turn becomes NVIDIA's chip revenue. And finally, that chip revenue bolsters NVIDIA's own valuation, giving them the currency for the next lap around the track. It's a textbook Wall Street maneuver, but supercharged for the AI age.
But this core loop, it's not acting alone. There are these massive corporate satellites spinning right alongside it. You've got AMD handing OpenAI warrants for up to 160 million of its own shares just to lock in chip deployment orders. Then there's Broadcom designing custom silicon, Amazon writing checks for tens of billions, and SoftBank sitting there like a leveraged spider right at the center of the whole thing.
Section 2. The math that must work. Let's see what's fueling this engine.
All right, time for a stark reality check. According to financial disclosures and projections by Deutsche Bank, OpenAI is expected to face a $74 billion operating loss in the year 2028 alone. And cumulatively, we're talking potential losses of around $140 billion between 2024 and 2029. That is just astronomical. The obligations they've taken on to keep this loop spinning are sky high compared to what they're actually earning right now.
So how do you offset those massive losses? Well, just look at their target valuation, $1 trillion. In June 2026, OpenAI confirmed they filed for an IPO targeting this exact number, promising prospective investors $280 billion in annual revenue by 2030. The mechanics here are crystal clear. The public markets, meaning, everyday investors like us, are basically designed to be the designated final buyer for this entire loop. But hold on. What's the actual demand for all this compute? A recent MIT study dug into enterprise AI spending, which is hovering around $30 to $40 billion right now. And they found something wild. A staggering 95% of generative AI pilots produce absolutely no measurable profit and loss impact. Zero. The 5% that do actually show returns, they're mostly clustered in basic back-office automation, not the flashy frontier models driving all this hype. And actually, there's a quiet counterproof emerging from inside the industry itself. Check this out. While OpenAI hit roughly $25 billion in annualized revenue with absolutely massive compute spending, their rival, Anthropic, surged to a $30 billion run rate while spending roughly 4 times less on training. 4 times less. It raises a really critical, albeit neutral question. If efficiency can flat out beat brute scale, is this massive financial loop funding the wrong variable altogether? Section 3. History's rhyme. Because, yep, we have built this before. Let's rewind to the late 1990s. Companies like Cisco and Lucent lent billions to their own telecom customers just so they could buy their equipment. Sound familiar? When the carriers defaulted, the bubble burst. But, impartially speaking, history teaches us a second verse here. Those bankrupt telecoms left behind cheap, dark fiber, which literally became the foundation that built the modern internet and Web 2.0. America kind of has a habit of overbuilding the future with private money, taking a huge crash, and then monetizing the wreckage. If there's an AI bust, it would leave behind cheap gigawatts of distressed, hardened infrastructure. Section 4. Funding a Manhattan Project. Let's talk about the strategic stakes. The geopolitical stakes we're looking at are just astronomical. For context, the original Manhattan Project cost the equivalent of $37 billion today. The Stargate program alone is 10 times that. The Western strategy here relies heavily on capital markets, essentially using a $5 trillion company's equity as a printing press for national AI infrastructure. Now contrast this with the East Fortress, namely China, which is relying on state-directed big funds and strict administrative planning. It is literally a war of finance versus industry. The really crucial point here is the systemic exposure. As analysts have noted, roughly a quarter of the S&P 500 is now, in effect, a leveraged position on AI scaling, holding through 2030. Think about that for a second. This loop hasn't just funded data centers. It has made the entire U.S. index, and by extension, the retirement accounts tied to it, a co-investor in achieving artificial general intelligence. Section 5. The 2026 Stress Test. We're starting to see cracks in the circle. And yeah, we're absolutely seeing real cracks in the circle. In recent months, tech stocks drove an unnerving global sell-off right at the epicenter of AI infrastructure. Just look at CoreWeave, basically the purest play of this entire loop. They were down 28% in a single month with a staggering 738% debt-to-equity ratio. Then you have Oracle, the middle gear, down 24% year-to-date. Even TSMC saw its stock drop the exact same day it announced a massive capex raise. Companies funding GPU buildouts on their own balance sheets are simultaneously derating. Naturally, this has sparked a massive debate. On one side, you've got skeptics like George Noble and Michael Burry warning of a bust even more significant than the dot-com crash, pointing right at these massive daily cash burns. But on the flip side, defenders like Fed Chair Powell and Goldman Sachs insist AI is a totally legitimate source of economic growth. And frankly, NVIDIA is defending itself with a massive $5 trillion market cap and very real 63% profit margins. So both sides are really digging their heels in here. Ultimately, the sources outline two very plausible historical endings for all of this. Ending 1, the revenue actually catches up to the circle, AI monetization explodes, the public enthusiastically funds the IPOs, and this whole thing is remembered as the boldest, most successful act of industrial financing ever. Ending 2, well, the efficiency curve collides with a massive cash wall by mid-2027. The loop unwinds, and it leaves behind a graveyard of distressed GPUs and cheap power, which creates an incredible buyer's market for foreign rivals in the East to polish up and utilize. So as we look ahead to this highly anticipated IPO, we have to ask a serious question. When that OpenAI bell finally rings on Wall Street, is it a bell of victory for a $1 trillion triumph of Western capital? Or is it an alarm signaling the end of the greatest vendor financing loop in history? That is the trillion-dollar question we're all going to be watching closely. Thanks for joining me on this explainer. Keep learning and stay focused.